Don Luskin, what's your stock market outlook? How is it affected by these S&P downgrades in Europe?
I don't see how it's affected at all. Was this a surprise? I guess maybe it was a surprise that it was today instead of yesterday or the middle of next week. But everybody's been expecting this blow. Who cares what S&P says? You know, these are the guys who were giving Enron their top rating on the day that it went bankrupt. This is absolutely ridiculous. So big deal. France now has the same credit rating as the United States. Did you want to buy stocks? Did you want to sell stocks when the U.S. got downgraded? It wasn't the exact day of the bottom, but if you bought on that day, you'd be so glad. This is the kind of news you want to get out. One of the reasons why is because now it's out, but also we've all officially told the truth. What do you know? There really is a difference between the creditworthiness of Germany and the creditworthiness of France.
All right, so let me move on. Jim Urio, I'll go to you. Meanwhile, back at the ranch, consumer confidence picked up again. The trade data showed we are still exporting substantially, even to Europe, but most particularly exporting to Canada, Mexico, Latin America, and Asia. That's a positive economic sign. And import prices actually fell in the month of December. So the good news keeps coming in, Jim Urio. Why should I be so fretful about S&P Euro credit ratings, which Don Luskin correctly said was already baked into the market cake?
Well, a couple things is that the numbers have been good and getting better. Yesterday was the jobless claims yesterday and the retail sales numbers were not great, but all the other numbers have been improving, and I am definitely a bull. Today, you know, France, when you characterize France months ago as one of the rescuers, and now we worry about them flipping to the other line where their palms are up looking for bailouts instead of being the bailer-outer, it's a little troubling, but I mostly agree with Tom that it's not a big deal and it was already baked in. But what I liked mostly is that the S&P took a hard punch today, you know, and it finished almost higher on the day, you know, came back quite a bit, it rejected those lows. The euro clearly seems like it's going lower. Now, the question to me is it going lower because of printing and accommodating or going lower for a worse reason? So it seems like the direction's predetermined, but the pace is sometimes a little bit in question.
Well, all right, but
hey, Larry, I need to jump in here with one really piece of good news about this that your audience needs to know. Part of this package from S&P today was an affirmation long-term of Germany's AAA rating. Remember, everybody, you want to talk about rescuers? Germany is the rescuer of rescuers. As long as Germany is strong, we're going to get through this.
That's a very good point.
It just was a little more, it felt more comfortable when there was two, not one.
Let me get to Jim LeCamp. LeCamp, so, okay, don't buy European stocks. By the way, if you look at what happened today, European stocks on a percentage basis went down less than American stocks. So they don't seem to be as worried about it as some people I know. So just buy American stocks. You don't like Europe, you don't like their growth, buy America. We're going to grow at 3% with rising profits of 10%, with rock-bottom interest rates. What's wrong with that scenario, LeCamp?
Well, for one thing, your numbers are off. This quarter is going to be about 6.5%, and next quarter is going to be less than 5%. And I agree that the news today was well advertised. Who cares about today's news? Here's what is not well advertised.
Which number? Which number were you talking about? 6.5. What are you talking about?
This quarter right now, earnings are running at about 6.8%,
well,
with 29% of companies that have reported.
For the year as a whole,
it's on the CNBC website.
For the year as a whole,
and
you're
the next
have 15% earnings growth. And
Larry, they've already downgraded.
2012
they've already downgraded next quarter to 5%. It's running now below 5%.
I'm just saying you're going to grow at 7 to 10%. You know why? The economy is going to do a little better. It's going to grow about 3%.
And the U.S.
And what I'm saying is those are fundamentals that are worth watching in terms of stock market investors. That's my point.
I agree, and that's all fine. And the U.S. is kind of like the only girl in an Alaskan bar right now. It looks better by comparison. So we're getting money that flows in from Europe. We're getting money that flows in from China. That's all good for the market. In the short term, the market is in an uptrend. I'll grant you that. But there is not going to be an orderly default across Europe. There's simply not, and there's not enough money to do anything but default. They can't even agree on Greece. And you're telling me Portugal and Ireland and Spain and Italy are all going to have orderly restructurings? It's just not going to happen. They've done nothing to promote growth over there.
You know, it's like the Republican campaign on buyouts and private equity. It's a distraction. Jim Urio, I'm saying people who constantly fretted and obsessed about Europe missed a tremendous fourth quarter rally in U.S. stocks. And my point, Jim Urio, is people who continued to obsess and fret on a minutely basis during the market trading hours are going to miss another good rally. That's, I guess, my basic point.
I agree with that.
I certainly believe that too. And the point is also is that it's a fairly easy trade with options volatility at this level too. So you can protect yourself easily. But Jim McCamp, you kind of made the point too. If Europe is heading for this destruction that you say it is, and I kind of tend to agree a little bit too, what else are you really going to buy with every government in the world throwing tons of money in the situation?
Investors have to be very careful in here. We put some stocks on. We're playing the rally here, but the rally has not been met with plurality by other markets. We're not seeing treasuries confirm the rally. We're not seeing commodities confirm the rally.
Nope.
We're not seeing commodity currencies confirm the rally, and there's not been a lot of volume in this rally. So it's a game of chicken. Investors are saying this is a better place to have my money right now, and that could go on for a while.
Yeah, it's going to absolutely go on.
Jim, look, there's one underlying truth here, which is for all the terrible things you can say about this world, stocks are cheap, and that covers a multitude of sins.
It does.
You've got to own them.
The S&P is going to 1450 or 1500. That's what's going to happen here. And don't